Hello, everyone. We are back with the next round of panel discussion. We have with us Naveen Asrani, the head of startup growth initiatives at Amazon Web Services. We have Suramya Gupta, managing partner at Capital SG Singapore. We have Ludovica, head of strategy Yoma Bank, and we have Ajay Ramasubramaniam, CEO, co-founder of Startup Reseau. We also have another panelist, Neha Mehta, who's founder of Fintech Partners. She'll be joining in sometime. Until then, over to you, Ajay, to lead the session.
Thank you. Thanks, Jagruti.
Thank you.
Hi, everyone. Welcome to the next track or the next session. Collaboration is the key to success. Interesting panel because we have with us people representing different kind of backgrounds. So we have a venture investor, we have someone who's a global technology company, we have a bank, and we have someone who is kind of doing work in the development space as far as financial inclusion goes. So different perspectives around how collaboration can be the next wave, or it can bring about a cumulative success or joint success. So before we begin, let us start with a hypothesis or a question touching upon, are fintechs really in a position to meet different needs of the industry? And no better time than now to talk about things like resilience, scale, being digitally effective, bringing about security. So are fintechs being able to meet the needs that the industry have? And if there are gaps, how can they be fed into, or how can they be filled? So maybe we can start with Ludovica sharing a bank's perspective on that.
Well, I was just going to say, interesting to start with a bank's perspective. I think that fintechs have the potential to soon deliver almost everything, if not everything. I just think we're not there yet. First of all, you need to put everything in its context. So, for example, if you pick Myanmar, where I'm currently working, no, we're definitely not yet there, and we can't get there soon. It's also a question of government and licensing and security and all that. In other countries, you take China, for example, probably yes. I mean, I think they actually went beyond banks now. So, I mean, just look at Ant Financial and what they're doing. So it really depends on the context. I do, however, believe that there's some things that banks are still providing that in some markets make them stronger than fintechs for certain aspects such as security, reputation, trust, everything that has been built on across centuries in some cases, as opposed to fintechs that are really quite new. Other than that, I think we're very close to that tipping point, but we'll see.
Naveen, working for a large global technology company, which is providing cloud infrastructure and probably the fabric around which a lot of this integration happens. You've seen things on close end on both sides. I mean, whether with large financial institutions as well as startups with whom you have been working for fairly long now. So, what is your take on this angle of fintechs being able to meet industry requirements?
I strongly believe that we all work with a customer first world, and both at Amazon and AWS, but more importantly, even with our customers, right? Fintechs are addressing a specific need that banks weren't catering to until a short time ago. So I strongly believe that the world was far more universal with the very fact that the customer drove the innovation, the fintech happened to fulfill it. Asia, to point of what Ludovica is speaking about, is how Asia is transforming it, because Asia just leapfrogged into the fintech revolution at this part of the region because we lived in a mobile first world. And I think cash discovery and engagement were three friction areas that happened here. So I think fintechs transformed that space. It also, I think, recalibrated what each of the enterprises need to transform, because just think of you and I going for a run, right, Ajay, in the morning. My speed is your frame of reference when you're running with me. When you're running alone, you could run the distance and you wouldn't know how fast you are. So I think the good part about it is customers today have more choice, and the fact that there's more choice and the spiraling of innovation that fintechs brought in has also got leaders like Ludovica at the table who are now looking at how do they transform the bank itself. So I think I would say it's not a catch up; it's essentially a good sprint.
Cool. Suramya, as someone who's an investor in fintechs, and I guess one of your portfolio companies, Niem, earlier known as Instarem, they just spoke before this session. How would you kind of set the tone for this panel on the aspect of whether fintechs are able to kind of fulfill the requirements of the financial service industry?
Yeah, no, absolutely, Ajay. So look, no disagreements with the previous two panelists, Ludvika and Naveen. As you said, look, Instarem slash Neum is a very good segue. It was a session just happened before. It's a very good example of a global platform that is being built. Where interestingly, a large number of clients now are banks. Banks in Thailand and in many countries want to offer their customers the ability to transfer money fast, cheap, and without having to build their own platform. So that's a very good example. We've seen players like Validus, SME lending, where in the past, for large banks, trying to deliver SME lending on their own has been a bit of a tricky aspect that maybe doesn't make sense from a lot of compliance and sort of return on investment perspective. But maybe these are roles where banks are happy to hand out larger chunks of capital to players like Validus who can then disaggregate and lend it out. So broadly, the collaboration between banks and fintechs, and I think it goes both ways, is definitely on. But I also want to mention that look, 2020 has obviously been a very interesting year globally. And if you see what's happening now at a global context, bank balance sheets are obviously constrained now. There are NPL issues, there are working capital issues. Having said that, COVID has also thrown into sharp focus the need to digitize, the need to make sure your customers don't have to turn up in a physical branch to sign a piece of paper. So, how is digitization going to proceed in the future? Will it be these large banks investing their own money? Or, given a capital constrained environment, will it be more partnerships with fintechs who can deliver it quicker, faster? But yes, may need a bit of handholding to be able to develop a bank grade system. So, I think, given the context we live in now, this collaboration can only improve further.
Cool. So I think we had Neha, but I think she's dropped off again. So that gets me to the next question. So moving on from what we started, as in, do fintechs even kind of fulfill requirements or needs? That's obviously it's a yes. There's a lot of development and progress that's happening. So bank fintech collaborations are nothing new. Just that over the years, probably what has changed is that banks have started viewing, or financial institutions rather, have started viewing fintechs as, or with an equal or near equal kind of say at the desk when it comes to kind of having a chat, having a conversation, and they kind of, many of them have a blueprint of sorts for identifying where such partnerships can really kind of fructify. However, having said that, because now we are seeing a lot of examples out there, can we call 2020 and beyond as the golden era of a bank fintech coexistence of sorts? Has there been a better time for this kind of coexistence or a two-way partnership to exist between banks and fintechs? Maybe it has been even fast-tracked by the current pandemic that we are surrounded by.
I was just going to say, if I may go first, as Gupta, you mentioned, indeed, this COVID period has really shown how important digitization is. And I think that's probably the key to success of the partnerships between banks and fintechs. We're seeing it firsthand. We're actually partnering with a huge fintech in Myanmar that has been invested in by Ant Financial. So really, really big partnership there. And yes, of course, this digitization era is really what's going to probably show how even more these partnerships are going to be fruitful. I think in the past, we've always been looking at fintechs as banks, as are they competitors, are they not, are we just complementary, or can we actually provide an added value solution for clients by working together? So COVID is maybe the catalyst, but kind of like what was in the panel question email that came around, these partnerships are not new. So I mean, yes, maybe now is the great moment, but we have been building on this over the years.
Naveen?
Yeah, from my perspective, what we see is Ajay is it's truly acceleration right now, which is going on. So they must have been at the table, but they never actually ate the meal, right?
Hmm.
So today, the last few months has actually also indicated. So I'll give you an example. We have a startup based, a fintech or startup based out of Malaysia called Jernexu. They do e-custom, multi-channel customer onboarding and eKYC and engagement and a credit scoring. They invested by Experian, and they do this for some of the largest banks across. Now, in today's current COVID times, that is the only way in which they could have actually, because banks cannot actually, customers cannot reach a bank, but Genexu's solution also addresses what a bank needs. So it's essentially the need for them to actually accelerate that conversation has grown x-fold because of that in today's times. The other side, which is there, is what seemed to be a good to have, which was voice-based engagement. Startup from India and ASEAN called Active AI, which is a voice-based. They've been servicing customers across in US and in Australia, especially credit unions, in the way they're actually helping, because in distances today you don't know in the new world how you're going to engage with a customer, and natural language conversations like voice will definitely transform that. So this shows also that in this today's world, the fintech is bringing an agility and a cost of acquisition of customer is lower, and it's also addressing some of the current norms that the current industry needs. Right? We talked about how the earlier session on Instagram and how they're looking at transforming. Fintechs provide you that additional muscle. So this acceleration that's happening for banks is largely driven by innovation that they're seeing with the fintechs and the adjacent area. So I think it's a mutually beneficial thing. And to your point, this could have happened and would have taken probably a little more, couple of months or years. Current times have just accelerated the conversation, and both are unlocking value mutually for each other.
Yeah. And I would just add one more point there that, look, also what's happened now, I think, is that this aspect will be now driven by customer expectations. Because in the last few months, with what we've seen is that in this COVID scenario, customers, all of us have got used to the platforms developed by the large technology companies. Like this call right now, we're speaking to people in India, Myanmar, I don't know where your, audience is from all over the world. And we can do a live video call and exchange our ideas. But if I tried to send money to any of you through the banking channel, it would probably take 5 days. There's a chance it might get lost and come back. And I don't know how much will actually get to the recipient. And nobody knows why, because it's the same data, right? You don't have to jump on a plane and actually physically carry that cash. So customer expectations are changing. They're seeing what Google and Microsoft and Amazon can offer. If Amazon can in 24 hours deliver any global product to me in any part of the world, then why does my cash or my loan or my credit card take so long to deliver? And that will drive banks to either sort of compete and partner, or they'll become more and more sort of cut out of the value chain.
So every time I'm ready with a question for Neha and trying to bring her into the chat, she's kind of dropping off. But good points that all three of you kind of touched upon, and it was just in an earlier conversation or a fireside chat that I was having with Ganesh from Kona Capital, where we spoke about the democratization or the consumerization of fintech, particularly in Southeast Asia and Asia broadly as a region. Because, and that's the point that all three of you touched upon, right? I mean, whether you talk of expectations and experiences, because if you look at, say, Google handling like 5.6 billion searches a day, or Facebook having 2.5 billion monthly active users. Similarly, I mean, no better example than companies like Tokopedia or a Grab. I mean, they none of them were ever fintechs, but because they have the kind of reach and the kind of experiences that they provide, they have been bundling or distributing different kind of financial service products to their existing customers and users, and that is what is probably challenging a lot many more incumbents, because not just about the ease of delivery, but because of the kind of experiences they have made us accustomed to as a customer. So, I mean, how is the rapidly growing consumerism or consumerization of fintech in South and Southeast Asia leading to building and bundling completely new fabric of financial services, which probably did not exist a few years back? I mean, Ludovica, I mean, as a bank, how do you kind of face this challenge, or how do you see yourself kind of as someone heading strategy and digital for a bank? How do you kind of see you overcoming something of this sort?
So I think the key thing for banks is really to, well, first of all, recognize the importance of fintechs. It's not something that we can ignore or brush off as, oh, but they're in a different market or different kinds of actors. No, like we really need to recognize that they're playing in our field, or rather that we're playing in the same field, and that we're often looking after the same customers. So once we recognize that and respect that, we need to look at what are the areas of collaboration and what are the areas of friendly or less friendly competition. And then we have this very friendly chat with fintechs in our market often, where we say, okay, where can we work together? We've spoken to the Grab, Facebook, Wave Money, as I mentioned earlier, and there's so many areas of collaboration. A very concrete example is, for example, we do payroll services for companies, right? So as a bank, we can provide a big service to the company. We can provide them with maybe credit lines, with business accounts, etc. However, the clients of those companies often will prefer the fintech account or the wallet as a way to cash in, cash out. So that's where we can really create a partnership where we provide maybe the head office with what they need as a business, but their clients will then be, for example, the money that we pay into the salary accounts will then trickle down into the fintech wallets to actually be disbursed. So there's lots of different collaborations. What we need to look at is, one, are we looking at the target market, and is this target market the same? Or can we maybe focus on slightly different segments like business versus personal, etc.? Other things that we can look at is, are we looking at the same pieces of the value chain? For example, maybe some fintechs can provide added benefit to the more client end part of the value chain, and we can focus more upstream, or where the companies maybe require more banking service. So there's definitely areas of integration. Things that needs to be kept in mind when we talk about integration, of course, are, do our priorities align as a bank and as a fintech? Do we have alignment in terms of time frame? Because fintechs are very fast, and sometimes banks are not at the same pace. So we just need to align on what expectations we set out there for the market. And technology integration is a huge one, but maybe I'll leave this for another. But this is a Pandora's box.
Naveen, I mean, I'll just follow the same sequence we've been going with. Naveen, I mean, you've seen things from different angles. I mean, earlier in your stint in Bangalore, where again you're working with another technology giant, and now with AWS looking at a broader kind of a region of Asia Pacific, Japan. I'm sure that there would be kind of numerous instances of direct to consumer brands which have kind of then bundled and packaged either fintech as a layer on top of it, or they have gone ahead and partnered a bank, challenger bank, whatever you may, where the distribution reach or the experiences that they have been providing into the region is what the financial service has kind of leveraged. So what would be your comments on this?
Yes, so essentially, Ajay, what does happen is, I think everyone is seeking to address what the customer wants. So, I don't think a particular company decides to become a bank tomorrow morning. What they do is, the objective is essentially, and this is being defined by the customer today, and it's largely people like you and us, who are living in the real world, right? So first of all, what does happen is, it starts from a customer specific need of an experience, right? So the experience is there, and then the frequency of engagement is there. How often do you go to a bank, Ajay? Honestly speaking, probably twice a month. If you have to look at your balance sheet, even if you have to check in and log into your account, digitization got you to log into it 4 times a month or 5 times a month. You probably didn't do it every day, or you didn't do it twice a day, but you logged into your wallet probably 20 times a day. And you probably had X number of taxi rides 40 times a day or a week, because you started. So your frequency of engagement defined your experience. Your frequency of engagement and experience defined what your next set of expectations or value was you were seeking. You assume that if I'm engaging with you multiple times, you should smile at me and know me better. That's what we expect in the real world. And similar to that, products that started engaging with the customer and started creating a better experience started moving to adjacencies which the current customer institutions don't offer, right? So example is, across the world, you've seen fintechs give you loans for even $1, whereas a bank's processing cost for a servicing that loan can be very, very different because the business model. But if you're looking at it from a frequency of engagement perspective, which happens to any large footprint engagement model, then the customer CAC is very low and your ability to service that need is very fast, and your intuitiveness based on your platform or your technology makes you more personalized services that you do. So that's the ability of what is happening actually. It's your customer leading your conversation. So if you see a lot of transactions, which, I'm sure Instagram and, Saurabh can speak about, is the volume of transactions that happen is helping where Instagram is moving to B2C and B2B, right? Because of the volume. The frequency is defining it, and that engagement is defining that. And based on it's forcing institutions and companies to innovate for customers. It's not a choice that's being happening by the institutions. It's the customer who's forcing that conversation to happen based on the way you and I live.
So I'm sure Suramya has many more Instarems in his investment portfolio, and some of the, Suramya, if you want to add to some of the things that we have just spoken about, and from your experiences, your portfolio companies, and seeing how some of these partnerships have kind of evolved, which may not have traditionally started out with a fintech background, but more of the distribution and the consumerism, and then layering fintech on top of it.
Yeah. So, see, what we've seen is that, and again, I would like to say that the partnership angle flows both ways. Banks are keen to partner with fintechs for a few different strategic reasons. But unlike maybe 5 years back, where every fintech we met used to sort of thump their chest and say, hey, I'm a bank killer, I'm going to be the next Goldman Sachs or DBS. Now we're seeing a new level of maturity where most founders, most fintechs are saying, hey, we're going to coexist, partner. There are certain things we do better, and there are certain things which banks will always do better. Now, what we've also realized is that for banks, they are also, realizing quite fast what their core competencies are in every region, in every context, with licenses, regulations, etc. They have some core competencies, but it's a bit hard for a bank these days to now go back to their clients and say, let's talk about wealth management or wealth advisory, that, hey, we can help you buy ETFs on 5 markets, but you can't buy bonds, on the New York Stock Exchange, or you can't buy stocks on the London Stock Exchange, which is why banks are being driven to say that, hey, we're good at XYZ, but our clients still want access to the other 10 things. And instead of us going and trying to build suboptimal products for every sort of financial product on the planet, why not partner with other people who have the core competence in that area? So that increasingly will drive, to my mind, a version of banking where a bank is a platform. It's a platform which offers products for customers. That product may or may not be entirely managed and sort of conceptualized by the bank. And that's where fintechs have a space to play. If you can add value to a certain bank's customers, there is a role for you to play.
I agree with Suramya entirely. The key thing is really understanding what are we good at, what are we not so good at, and then putting the two pieces together for ultimately benefit the clients, which are the most important bit of the chain.
So that kind of leads in beautifully into my next question, which is so for partnerships to kind of really work, it needs to be a two-way street, but also there needs to be certain elements or areas that one needs to kind of really focus on. So I'll begin this one with Suramya, because because you'd be sitting on the boards of quite a few companies as an investor. How much role does leadership have to play in this?
Yeah. So, brilliant question, Ajay. And what I was going to say on that aspect was absolutely about leadership. Look, every bank understands what they need to do, and it's not rocket science. Banks understand what they're good at. There are certain areas they might need outside partnerships with fintechs, etc. But very few banks have been relatively successful in these partnerships. And almost every bank these days has an accelerator and their sort of partnership programs, etc. which is good. It shows intention. It shows sort of a direction to move in. Some of them do a better job, and at least in my limited experience, it's entirely driven by senior management focus. In the good banks that we've seen, and I must sort of mention DBS and sort of their CEO, Mr. Piyush Gupta, we've literally seen young fintechs WhatsApp Mr. Gupta directly, and if he likes it, he instructs his team to go execute. Uh, you know, and that sends a message across the sort of middle management of a large bank saying, "Hey, this is important to my boss. This is important to the senior management. So let's really focus on this." I think that is definitely a critical differentiator, and sort of the senior management needs to have a clear sort of strategic view of which are the areas within their bank that they want to focus on, and then drive that.
Good. As a part of the same question, so I'm just breaking it down into 3 or 4 different segments which kind of need to contribute towards creating those partnerships and collaborations. So I'll go to Ludovica with the next aspect. You did touch upon startups or fintechs being more agile. So how do these collaborations between fintechs and banks or large financial service companies, how can you drive optimum organizational agility by bringing together a large player who is in this case maybe a bank who has the reach, who has probably the trust of the customer, but at the same time on the other hand you're bringing in a technology first kind of company which is agile and quick at taking things to market. I mean, for a partnership to work, how much is the organizational agility a key factor which will determine the next steps for the partnership?
So from an organizational perspective, what we do actually is to bring agile into the methodology also as we work. So for example, and this is really going into the details, but we do work with sprints, with squads, with everything that you're used to hearing in the agile methodology. We just take it outside of technology and bring it into the way we work. So we'll have these war rooms or just meetings together with us and the fintech leadership. And really work through every single initiative we want to deliver in a very agile way. That's because if we were just to sit alone as a bank, we have our usual time frames, and you have to get approval from the the central bank here, and you have to ask technology to deliver that. On the other hand, working together with a fintech, we kind of take the best practices of the way we work in order for us to deliver faster. And then just going back to the point of understanding who is faster at what. If there is something like a technological advancement or whatever, we just rely on whichever technology is faster, which, by the way, is not always necessarily on the fintech side. I mean, there are some instances where the bank will just have the answer quicker, while the fintech is maybe still working to establish their, maybe it's not the core banking system, but whatever system they have, and putting in place certain aspects. So I think just working together and having an agile way of working, and learning from best practices of each of the two sides is the best way to work at the same pace.
Naveen, I'll just close this one with you. So because you'll be working with both large financial institutions on one hand to whom you're providing the fabric or the infrastructure, but on the other hand, increasingly the focus is on getting fintechs or the adopters of the cloud to come onto the platform and to even make that happen. I mean, from your engagements or relationships on both sides, how much clarity do you see from a business driver or objective perspective, rather than just saying that, hey, I mean, we are mandated or required to work with fintechs because everyone else is. Are you seeing that crystal clarity or a business decision making that comes in at the time of even exploring these collaborations? Because I'm sure that as AWS, you are also taking growth stage companies to large financial services or large banks whom you already are kind of partners with, working with. So do you see the clarity in thought when you get into the room or get onto the table together?
Yeah, actually, absolutely, Jay. I think there was also, I think what Ludovica speaker spoke about was a few years ago, this would have been early, what I call an exploratory conversation on both sides, or maybe an optical conversation on both sides, just to say an activity-based approach. But I think a couple of things that have shaped in the last few months, and if not last couple of years, has been a strong visibility by leadership on both sides that each one is providing what I would call equitable value. And the key area that they're trying to address is the trust. In fintechs as well as the bank, the foundation of the business is not just your experience. The core of it is the trust the customer has with you. And it doesn't matter whether it's a 1 cent transaction or it's $1 million transaction. It's a trust that I know you have me by your side. And I think that's forcing them not just to look at it from an exploratory perspective, but more deliberately, and also see the values that are aligned between the two organizations. Because I think you can always ingest technology, but you also need to run with it. So we're seeing that shift happen. So we've got a program called AWS Connections where we actually take startups, growth stage startups across the world. And one of the areas we as a team also understand is we are transacting in trust on both sides. So, even for a startup, a wrong introduction can take away bandwidth of 2 to 3 months of two or three of their key resources. And on the enterprise side, it's, some of their use cases are so sharp now that they don't have time, or they're looking at solutions right across the world. They're just not limited only at Singapore or APJ, right? They're saying, get me the best solution across. And today, COVID has made sure that everyone is digitally equal. We are all distributed across the world, but we all are accessible in real time, like the conversation we're having today. And that is shaping the fact that everyone has an equal opportunity if your tech and your value is meritorious. And I think that shift is what we're seeing today.
Great. So let us get to the last but one question and get into some bit of relationship advice, like what would really make bank fintech collaborations a success. So let me go to Suramya with the first one. So being an investor and coming from both VC and PE kind of background, does it make sense for banks to invest in fintechs early on and be a part of the journey?
So we've seen both models, Ajay. In fact, we have examples of banks looking at investing in some of our fintechs right now. And this might not be the best thing for me to say as a VC fund manager, but I personally think that for banks to write small checks, 1 million, 5 million, my experience is it may not be worth the bother. Because for a bank, unfortunately, as a regulated entity, whether it's a $50 million check or a $5 million check, the process tends to be similar.
Yeah.
The complications tend to be similar. And also, once they are equity investors in a fintech company, then their approach will unfortunately have to become a bit different, where maybe the fintech will lose some of its freedom and speed if a bank is, as a shareholder, trying to also sort of put the compliance lens on it. So my preference would be for banks, at least at the early stage, to support fintechs with business, maybe with sort of insights and resources, but let the equity investors do the equity investing. And maybe when the fintech scales up, when it's ready for real strategic partnerships, then come in and acquire 20, 30, 40% and be a strategic partner, not an investor who's looking to trade in and trade out.
Got it. Ludovica, so the question for you would be finding a middle path where there is a shared purpose and flexibility, because this is something that is found lacking a lot of times, and it could be on either side. How important is it to have a shared purpose or a common mission and flexibility in approach on both sides? I mean, from your experiences with fintechs that you might be working on currently, or because you've had an earlier stint as well in Southeast Asia, what has your experience generally been?
It's the foundation. You need to have this shared purpose, because what we have had as issues, for example, or lessons learned, is that where priorities are slightly misaligned, it's just the beginning of issues, of different expectations. You end up not satisfying the client and just moving slowly and creating a dysfunctional relationship. What you need is mature startups. So kind of like what Suramya said, not a startup that's too small that we're still investing in, but rather a mature fintech that knows their strengths, and then aligning together and having a very, very clear and constant communication on what are we aiming to achieve, and does this align? And then also just having a very open conversation on, do some of these areas present competition? If yes, maybe let's leave that and let's look at other areas where we're actually better when we collaborate. But flexibility and shared vision and purpose are the key to success. Going back to another point that was mentioned earlier, the people. So alignment across the leadership teams is another fundamental aspect, because you can really see how personalities can sometimes determine the success or not of partnerships.
True, very true, very true. Naveen, on this one to wind up, so we've discussed investing in companies, having a shared purpose and flexibility. So what about a classic client-supplier kind of relationship? I mean, you would have been party to several of those conversations, bringing together two different entities, one big and one probably not so big. How easy is it to have a straightforward client-supplier relationship, and is that probably the best middle path to have for both entities?
From our perspective, I don't think the intent is also on both sides. Both are our partners, right? We are a partner for both. We are a customer. So if you look at it very simply, the large banks are our customers, and on the other side, the startup is also a customer, or the fintech is also a customer, but also a partner. I think the critical aspect of it, and I think what Ludovica was talking about, is pick a swim lane, articulate your value, which is where fintechs tend to scale well, and then on the other side, we have seen the temperament of people willing to experiment, right? I think nobody has the answer yet, and I think if you bring in people like what Ludovica spoke about with the temperament, who are embracing the change, then you see a great matchup that happens. And then the institution that's getting transformed or is looking at innovation really appreciates this and doesn't look at anyone as a client-supplier relationship. They look at it as, you are enabling me to transform better value. So the shift is very different, and they don't look at it as a partner, vendor, or supplier engagement. They look at it as saying, hey, I'm giving a buffet meal. I don't have the dessert in this meal. And in India, since we are in the week of Diwali coming week, imagine this, think of it, and it could be a small diya which lights the lamp, but that small diya can shift the whole, or shift the entire table's view, right? So you should look at it not in terms of scale and size. It should be about the value it's expressing in the intrinsic customer's journey or the customer's world. And I think solutions like Instagram, the transformation that we see across startups and fintechs is what does that. So if you are willing to embrace light, then darkness is never a problem. You can just go ahead. So the issue is the way you're looking at it, and the prism is the people. And I think Ludwika looked at it very truly, that you can look at each other as transactions, or you can look at it as a relationship. The call is the way you want to look at it.
That was a nice festive tweak to the answer as well, or the question as well. So we are on to our last question, and we can take probably a couple of them from the audience after this. So, I mean, 2020 has kind of barely ceased to surprise us. I mean, different aspects. I mean, for the first time, bringing it to the fintech side of things, we have seen fintechs acquiring incumbents. So, Lending Club bought out Radius Bank, Reseau, which was like a 20-25 people fintech, recently closed a deal on Mid Central National Bank. Do you see any of this kind of action happening in the ASEAN region? Fintech taking over a big or not so big bank? So Ramya, if we can start with you. I mean, wearing an investor's hat, wouldn't that be like wonderful for any of your portfolio companies to do?
Yeah, no, so absolutely. I think the possibility exists, Ajay. I think there are conversations, and this is not, obviously our friends in the investment banking community are obviously pitching these ideas at the moment. If you look at the market caps of some of the large banks in the world, it's a tiny fraction of the market caps of some US fintechs, tech companies. So have those companies explored and thought about acquiring global banks? Absolutely. If you look at India as an example, for example, there are companies which are still classified as startups, whose valuations are sort of multiples of many listed NBFCs and small banks in India. So would it make sense at some stage for them to partner, acquire with the sort of licensed players? Absolutely. But it's a bit complex, not, if I wanted to, I couldn't just go and buy a bank. It requires regulatory approvals. It requires sort of having the right background. So not everybody can do that. But I definitely think that that will play out over the next few years.
Naveen, your comments on that?
No, I think it's a dual street. I don't think it's too early, honestly, Ajay. I think there are certain acceleration the macroeconomic environment provides, like Surmaya said, but I think also the customer is going to force those conversations. I think the issue which is there is it's not an economic conversation; it's a customer conversation, because today switching into a bank is quickly as switching out of it. So today the customer chooses in real time whether they want to transact with you, and we live in a very different world where I think customer experience is paramount, and you can no longer take the customer engagement as for granted. I think each of us earn our seat at the table every day, and I think that's very important, because the conversation of that is what drives any of the conversation that Suraya was talking about. See, unlocking value is only a function of what the customer wants, because we can decide to go to a party, but if nobody wants to turn up at it, there's nothing much can happen, right? So that's the reason why I feel that the customer will drive the conversation.
So I have to make a quick comment here that please remember Naveen represents an organization where his boss will obviously, Mr. Bezos is going to build his own bank, like he has built everything.
I don't think I should comment on that. And, it's actually speaking with no room to run off. I actually am running late to my next meeting. So, Ajay, I'm going to leave the good questions to you and Samaya and Ludwika, and I'm going to see you again right soon. Thank you so much.
Thanks, Naveen. Thanks for joining us. So I'm anyways done with my set of questions. So if we have audience questions, you can either do a raise of hands. There is an icon right at the top of the screen, or you could just post your questions in the chat window and we'll pick it up from there. Nothing that I see here. Yeah, if there are any questions, please do a raise of hand or drop in a question and we'll take that. Maybe we have time for one or two. If there are none, we can say thank you to our amazing speakers, our panel. Jagruti and Sumit, do you guys have any questions that have come to you?
No, Ajay, not yet.
No? Okay, I think there's one hand raised. I think it is Kiran. So Jagruti, you need to give access to Kiran to come on stage. And
Timanna also.
yeah, two of them actually, Timanna as well. Yeah. Hi, Timanna.
Hi, Jay. This is to Saranya. See, India, we have a lot of digital infrastructure. We are able to build all the use cases, basically towards MFI, affordable housing, MSME, like cash flow based lending and all of that. And how do you think we are, what is the competitiveness to take this to Asian countries where the mobile or digital adaptability is very high? Maybe the digital infrastructure is very low compared to Aadhaar, DigiLocker, UPI, all of that. How do you compare these India and Asian markets, especially Malaysia, Indonesia kind of thing?
Timana, so in our experience and over the past 5 years, we have invested in Indian fintech companies that we have taken overseas. I'll give you an example of a company we invested in called Bank Genie, which is Mysore, Bangalore based. That makes products for mid to sort of large banks, NBFCs, microfinance companies. And actually, when we invested in that company, we told them, hey, you have decent products. We think there's too much competition for you in India. Knowing how the market operates in India, maybe you won't be able to fully monetize these products in India. But let us take you over to Southeast Asia, Africa, Central Asia. And they've done a phenomenal job. They now provide their products and services to some of the largest banks in Africa, Philippines, Kazakhstan, etc. So we absolutely, at least at our fund, we have this thesis that we see a good startup in any part of this region being able to operate in other parts of the region, obviously with the right partners and the right support. Having said that, what we've seen is that India is such a large market, at least the market opportunity, that quite often our founders in India get sucked into the Indian sort of ecosystem. And it's a bit hard to step out of it and say, hey, I'm going to spend some of my bandwidth on Indonesia or Malaysia. So, I would absolutely suggest that there is a huge market out there for Indian products to be sold outside India.
On the follow-up question on what is the multiplier on pricing and what are the we know there is a multiplier on the number of customers. For example, we do a digital platform for farmers. We have 10 crore farmers borrowing every year. We have touched just about few lakhs by now. The multiplier on the number side is very huge. We can go as low as like few rupees. It doesn't matter to us. But when you go to the Asian markets, what is the price multiplier that we get? Because we may not get the numbers other than Indonesia, Malaysia.
Yeah. So I won't comment on specific business models, Timana, simply because I don't know too much about your business. But just to keep it simple, say the bank genie model, the same product that they were struggling to offer to, say, microfinance companies in India for maybe a license fee of $25,000. In Philippines, we've been able to sell it similar product. It's all obviously not exact at $200,000. It's about what you're offering, who needs it more, and what is the level of competition in that market. You may not be able to sell your product in every market, but that's why you need a partner who can figure out which market would your product be best fit in.
Yeah, another small quick question. See, we are stopped by the RFP and FinTech partnership models. Suddenly we landed in Indonesia with a reference by ASEAN, and we see there is an RFP procedure like in India. They've been following, everybody's following a request for proposal procedure. You have to qualify, you have to have a balance sheet. Are the new models evolving like FinTech partnership, quick partnerships?
Yeah. So my short answer to that, Timana, would be that you need the right partnerships. If you are ever trying to roll out your business in Myanmar, then Ludovica would be the perfect partner. Yoma Bank would be a good partner. But it is obviously hard for you to operate in any other country without the right partners. And maybe I think you mentioned ASEAN, if I heard that correctly. So ASEAN would obviously be able to help you with that.
Yeah. Okay. Yeah, thanks so much.
And one of my colleagues, Ganesh from Kona, which is an ASEAN fund, addressed a session in the morning. Yeah. So they have presence across Southeast Asia. They should be able to absolutely help you with this.
Sure. Thanks so much.
Yeah. So there is one more question that I see in the chat window, which talks about the pitfalls to collaborations or partnerships which investors are cautious of.
Sorry, I didn't get the question, Ajay.
Any pitfalls that you see to collaborations or partnerships which as an investor you would be cautious about?
Sure. So again, look, there's always a flip side to this. If you have very strong traction in your home market, then you need to have a clear thought about why you're spending any bandwidth in a market outside. If I was invested in a company which is just going gangbusters in India, then there's still good reasons for them to expand their canvas, but you have to think a bit deeper about that. And B, again, as I sort of, I would just underline that before you jump into any market, there has to be very, very deep thought about which market, why you're entering it, and do you have the right partners for that market? Because just keep in mind that, let's say you're talking about Malaysia, you will be competing with other players who are Malaysian homegrown. There would be a natural bias towards them. So if you don't have a significant edge in your product and the right partner, maybe it doesn't make sense to enter that.
Cool. Thank you, Suramya. Thanks to Ludovica. So with that, we'll wrap up.